Everyone, myself Vaibhav. In today's session, as we can see, the USD is the king, and considering the prevalence of risk of sentiments, we can easily say that the odds favor the USD. So, in today's session of market movers, we will see if there are any emerging opportunities for us in light of prevailing situation in which we are betting on the USD's appreciation to continue against its major currency peers. If we consider the trading context for the day, today's risk of sentiments have been as the result of multiple bad news. We saw some banking details emerging because of US network in which multiple banks have been named, which have you can say that they have the transactions on their books which have been of suspicious nature, and these transactions have been flagged. Of course, this is most of the historical data, but because of that, we have seen, especially in the European station, many major bank stocks have been lower, and this has also had implications for the broader markets. On another front, the coronavirus outbreak is continuing to wreak havoc across the world, and in light of rising coronavirus cases in the United Kingdom, the UK government is actually likely to put new restrictions in place to curb the COVID-19 spread. And also, we have seen in last couple of days the US count is also on rise. So on that front also we have new worry points emerging. So we have to watch out how these things are going to affect the market sentiments moving forward. Now let's shift our attention to the technical segment here. We will first consider the dollar index, and then we will also consider the euro USD cross. Let's start with the dollar index technical outlook. This is the daily time frame chart, and this dollar index fall has been remarkable. We saw this prior fall again, then extending to almost close to 161.8 Fibonacci expansion, and then after extended consolidation of almost close to 2 months, we are seeing this consolidation now shifting bias to some sort of retracement taking place, and I think we can pretty much expect these levels close to 95 might be reached in next couple of weeks. So I am betting on the appreciation of the dollar index to continue for next couple of weeks also. That is also a probability possibility which we are looking at. But as you might be aware, the market mover session is mostly focused on the short to medium term opportunities emerging in the market. So for us, the main focus is of course what is likely to happen in today's session. So we will see, given the fact that we have these almost sideways momentum in a very tight range taking place for last couple of sessions. I think we can utilize these immediate swing lows formed over last few sessions, and then see if there are any short to medium term trading opportunities coming our way as the sentiments are changing in the broader market. So here we have this 4 hourly chart for the dollar index, and this consolidation with the lower band being closer to this central pivot point of this month's pivot point series had indeed provided good support, and as you can simply notice from the chart, we had the extended consolidation taking just little above this central pivot point, and now here the possibility of dollar index moving past this immediate hurdle is quite strong, and I feel now we should be looking at the second resistance of this month, and that is almost more than 1 percentage point away. So as you can see, we have the possibility of almost more than 1 percentage point, and if we are fortunate enough to see some correction, and then maybe if we can get the entry anywhere closer to 93.5 93 to 93.2, we might even be looking at almost 2 percentage point move possibility in the dollar index. The regression curve has now, after long consolidation, bent on the upside, and also the price action is taking place in the upper half of this pivot point band, and if this first resistance is crossed, then that will also open up the window for further appreciation in the dollar index. So looking at these technicals at play, I feel that this 200 SMA is going to be of crucial importance for the dollar index near term movement, and as long as the dollar index is being able to hold above these 200 SMA, we can continue to bet on possibility of continuation of the upward momentum in the dollar index, and as I said, we will be in position to target above this prior swing high, and as I said, looking at the larger time frame chart, the levels close to 93 might be expected. But if suppose we are going in for any buy entry anywhere in the vicinity of 93.10 to 93.20, or even we can extend the entry point even close to 93.3 if the situation warrants. But of course, first thing we will need is some sort of correction to take place from the current level, and then at least couple of hours of consolidation to happen before we can make our mind and think about going long. And I think, as you can see, we will be in position to use this prior swing low as our stop loss. So any entry anywhere in the price band closer to 93.2 with the possible stop loss coming in around 92.7 should be good enough. And on the upper side, even if we want to get the risk reward ratio 1 is to 2, we will only need to target the levels around 94.2 to 94.3, and that should be good enough from the risk reward point of view as well. Now let's shift our attention to the Euro USD's technical outlook. This is the daily time frame chart, and here we have the Euro USD's ongoing consolidation lasting more than 2 months, and I think after having rallied substantially, we might see some sort of fatigue creeping in the Euro USD's movement, and the immediate projections suggest that we might see the Euro USD breaking on the lower side, and the immediate target then will be just closer to this 38.2% Fibonacci retracement of its prior rise. So here we are looking at the continuation of the downward momentum in the Euro USD, and as we had talked about in prior session, the bears have now taken control over the Euro USD, and if you had gone in for that trade, I think you might be sitting on good amount of profit there. But now that we have seen already substantial move in today's session, I think if we are going to look for fresh trading opportunities emerging in the Euro USD, we will have to take it easy and see if we can get the optimum entry and the exit points. So for that, we will mostly have to rely on the lower time frame chart, and on the 4 hourly chart, we have the price action ticking across the central pivot point of this month's pivot point series, and then the first support we saw multiple times the reversal happening closer to this first support, and now this time around we might see things are likely to play out differently, but still the Euro USD hasn't really crossed below it, and it is maintaining just closer to that. But on the whole, I think the picture has now turned bearish, and as long as the price action is also in the low band of this regression curve, we can continue to bet on the possibility of further moves on the lower side. Also, we have the central pivot point around the 1.186 level, and as you can notice, the here this long extended consolidation was closer to the central pivot point, in which we saw that Euro USD struggled to cross and hold above it. The near-term price marker can be kept at these level only, and I think if we are fortunate enough to get any retracement taking place in the Euro USD, and then after due consolidation, we can indeed think about going in for fresh short selling trades while keeping the stop loss just little above this prior swing high. And if you want the fresh entry, I would suggest that we target the confluence of 50, 100 and 200 SMA. Here we are likely to see the Euro USD 50 SMA again crossing below the 200 SMA, and just couple of hours in today's session only we saw this crossing above it, and now as the turnaround in sentiments has taken place, we are likely to see it again crossing below it, but that is now almost inevitable given the fact that price has moved a lot lower compared to these 200 SMA, and all these confluence zone can indeed be expected to provide some sort of resistance on the higher side. So here in today's session, the Euro USD can be it taken into consideration for any short sale trade anywhere in the price band of 1.182 to 1.183. But as I said, we will need to be patient here, and given the fact that we are almost trading 50 pips lower than the required price, we might have to wait a day or two also, but those levels will provide us good risk reward opportunities, and we will be in position to keep the stop loss just little over the prior swing high, and that should be safe enough for any trade to take place as long as we are expecting more than twice the amount for profit compared to the risk we are taking. So that's it from my side for today's session. And if any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.